Lynette, I'll start off with you. Just give us a little background to this savings and investment monitor, and what do you hope that it achieves?
Thanks, Samantha. It's a biannual survey of working Metro South Africans. So it is just that group. But what Old Mutual really hopes to do is to really bring the results to the average man in the street in a very simple way, to really show what is happening in terms of savings and investment in South Africa, and to urge all of us on to save more.
Why are people delaying making financial decisions right now? What type of trends are you seeing in savings, and how bad is the situation from an economist perspective, Rian?
Well, Samantha, the fact of the matter is that South Africans save way too little. We save too little as a nation. Hence, we run a big current account deficit. We need foreigners to finance that for us. Now, you can do it for so long and then no longer. Ask the Greeks and the Spanish. So we need to save more as a nation to finance investment in the economy. That's number one. But from the perspective of individuals, individuals save way too little. Now, the problem is that many individuals, and you've got to distinguish between people that can save and that cannot save. Savings are essentially determined by the ability to save and the willingness to save. Now, there are lots of people that simply do not have sufficient income to be able to save, but there's a big group of people that actually earn decent incomes that could save, but they're not, simply because they choose not to save. And very often, people confuse the ability to save with willingness. They say, I cannot save, but that is after paying the expensive 4x4 and so on.
Okay,
so we need to save a lot more.
We know that, and everyone always will make excuses and then perhaps spend a little bit too much money on things that they don't need. What impact does this have if you're not putting money away for a rainier day? Because it seems that days aren't that good at this point in time.
Well, what we see from the results is it has a number of effects. So one of from the survey, we see that people expect to be reliant on either their children or the government, or both, when they're old or when they can't take care of themselves. So certainly, not saving for the future is going to have a great burden on our children if we don't do that.
Yeah, if you start saving now, positive benefits further down the line, compound interest. Tell us about that.
Well, if you really look at savings over time, there are only three things that determine whether you have enough capital to retire on. The one is how long do you save for, the second one is how much do you save, and the third one is what's the investment return. Now, we know that investment returns, in a slow-growing world, investment returns will be low. We're seeing it in the markets today. So going forward, in South Africa, cash gives you 5.5% at the moment, government bonds 7%. So you need to have high real returns from equities to drive decent returns over time. And we don't think you're going to get that. So the implication is people will have to save a lot more in the years to come. And I don't think people are aware of that.
Yeah. Well, it certainly is something that deserves more attention. Thank you so much for highlighting it today for us. Lynette Nicholson, Head of Research, and Rian, Chief Economist at the Old Mutual Investment Group.